What's good, y'all? Let's break down the triple Qs. Right now, the triple Qs are still bullish on the higher time frame, but we're starting to transition from pure momentum into a more important execution phase. And that matters because this is where traders usually make mistakes. Now on the daily chart, price pushed directly into the psychological 700 level. That was a major liquidity target, and the market tagged it almost perfectly before pulling back. That pullback is not automatically bearish. In fact, after a strong vertical move like we just had, some cooling off is completely normal. The important thing is this: the higher time frame structure is still bullish. There has not been a confirmed bearish break on the daily chart yet. Now moving over to the 1 hour chart, this is where the real information starts showing up. The 1 hour is currently showing controlled pullback behavior, not panic selling. That's a huge difference. We're not seeing aggressive sell displacement. We're not seeing market structure collapse. And we're not seeing buyers completely lose control. Instead, what we're seeing is consolidation after expansion. That means the market made a big move, hit major resistance near 700, and is now trying to decide whether it wants continuation higher or a deeper pullback first. Now on the 5-minute chart, you can clearly see the sequence. The triple Qs impulsed into 700, swept liquidity above the highs, rejected a bit, and now price is rotating and compressing around the 694 to 695 area. That zone right there is the key battleground now, because if buyers can continue defending 694 to 695, then the market has a real chance to push back towards 698 and possibly retest 700 again. But if price starts losing 694 and fails to reclaim it, then downside liquidity around 688 becomes the next likely draw. Now this is important. This is no longer a random chase environment. This is execution territory now. Precision matters here. Entries matter here. Confirmation matters here. The highest probability long setup is not chasing emotional green candles. The cleaner setup is waiting for a pullback into 694 to 695, then watching for buyers to defend that area. Ideally, I want to see a pullback, a higher low on the 5-minute chart, a reclaim candle, and then continuation. That becomes the cleaner long entry. Now, if I'm taking that setup, structural invalidation sits below 692, not random, structural. If price breaks below 692, then the current consolidation starts weakening and odds increase for a move towards 688 support. Now, upside targets from this structure remain 698 first, then the psychological 700 level. And if momentum expands again, 705 becomes possible. At the same time, there is still no confirmed higher time frame short setup right now. And that's important because a lot of traders try to short the first red candle after a strong move. But for bears to actually take control, we would need to see a loss of 694, a failed reclaim, a lower high, and aggressive sell side displacement. Without that, shorting is still counter-trend guessing. Now, from an order flow perspective, the market is currently balanced to bullish. Why? I'm glad you asked. Because yes, sellers rejected 700 temporarily, but buyers stabilized price very quickly afterward. There's no panic liquidation happening right now. No heavy downside imbalance. No major breakdown in structure. This still looks like consolidation near highs, not confirmed reversal. So going into the next session, the biggest thing I'm watching is whether the triple Qs can continue accepting above that 694 to 695 zone. If buyers defend it, upside continuation towards 698 and 700 stays very much alive. But if that area breaks down and fails reclaim, then odds increase for a move lower into 688 support. So the game plan stays simple. Bullish above 694 to 695 with confirmation, bearish only if support fails and reclaim gets rejected. And until higher time frame structure actually breaks, bulls still control this market. Stay patient, stay disciplined, stay sharp. Ciao.